Hey, this is Greg. Welcome to the channel. Today we're going to talk about a stock that came on my radar screen a little while ago. I've been watching it for a while, and it's none other than PayPal. Now, if you've been watching the stock market, and in particular if you've been watching PayPal recently, you would know that it's undergone a massive sell-off. It has been relentlessly selling session after session after session. I don't really understand why, because its last earnings report actually slightly beat their estimate, but nevertheless, concerns have arisen apparently in the market among investors about its competitive position and increasing competition, and that's what we're going to talk about on this video. And by the end of the video, I'm going to give my recommendation on if we should go in here on this stock, because it is a very good company and it has sold off tremendously, and this might offer an opportunity for us to go in. Now, one of the things that interests me about this stock in particular is the whole e-commerce space. All right, the e-commerce space has shown enormous growth over the last 10 to 15 years, and I believe it's going to continue to grow exponentially. Take a look at this chart. This chart basically shows the percentage of e-commerce sales to retail sales in general, and you can see it's now 2022, or projected to be in 2022, around 15%, actually in excess of 15%. And I believe that this growth will continue in the future, so it's a rapidly growing market. Take a look at this chart, which is basically the growth of PayPal since 2014, and you can see it's a massively growing company. It's growing very rapidly. It's enjoying the benefits of the growing e-commerce space, and it's done very well for itself over the years. But as I've said, investors recently have grown concerned about a number of things regarding PayPal, and let's go through them real quickly right now. One of the main concerns is the increasing aggregation of e-commerce platforms in the way that they are getting into the space and basically increasing competition. The competition is increasing basically by the large players, namely Amazon and Shopify, for example. They're both exploring or actively pursuing their own payment platforms, and this is going to increase competition, because it's hard to believe, but between Amazon and Shopify, they currently control approximately 32% of the e-commerce transactions. And in fact, Shopify is pursuing its own payment platform, and that will do nothing but cut in further to potentially to PayPal's market share. So this concern basically manifests in the concern that their market share increases will slow over time due to more competition. You have platforms coming in that are buy now, pay later. This is a recent development. You have the proliferation of credit card autofills on browsers, where the credit card information is automatically downloaded into the buying screen. And then, of course, Apple Pay is becoming more and more competitive, and you're seeing them gain market share. The news hasn't all been negative for PayPal. There have been some positive developments. For example, Venmo recently cut a deal with Amazon. Amazon will now accept Venmo payments on its platform, and Venmo, of course, is owned by PayPal. Another positive is PayPal is very well positioned in the digital wallet space, and believe it or not, they have 360 million current users, which is an enormous base through which to not only process transactions but to market other services to, since they are essentially a captive audience. The other thing I view as a positive, and I want to look into this further as time goes on, is it seems to me that they have been making more of a commitment to the crypto space. Along these lines, they have created the ability of users to actually do crypto transactions, buying Bitcoin and other crypto currencies. And in addition, they have invested in several blockchain startups, which I think is very interesting. They invested in one called TaxBit, which was a startup that was also invested by the Winklevoss twins. Das Winklevoss twins, that's very interesting. And since they are, some of the early investors in the crypto space, I found this extremely interesting. Now this bit tax, it basically is involved with calculating the taxation or the tax liability associated with crypto trades. In addition to this, they've also invested in a number of other blockchain related and crypto related startups. And so I think they're getting more and more active in this space, and I don't know if they're going to start using blockchain technology to power the actual transactions. I'm going to have to do some more research on this, but it's interesting. It seems to me that they're ahead of some of their competitors in terms of investing in and utilizing blockchain and crypto in their business. Another thing I found very interesting about this on the financial side, if you take a look at 2020, at the end of 2020, they generated $1.1 billion in free cash flow. For a company of this size, that's absolutely amazing. Okay, but anyway, the reason I got interested in this stock is because of the dramatic sell-off. Now, I use PayPal myself. I think it's a fantastic service. I use it for probably most of my online transactions, so I am a customer. Seeing this stock sell off day after day after day, I'm saying to myself, okay, they didn't have necessarily a bad earnings report. Like, what is going on here? Doesn't this seem a little overdone? I think it has been overdone. So let's go through a couple of my financial metrics that I look at on this channel, and then I also want to take a look at the technicals on the stock itself before I make my recommendation. Okay, so here we are with PayPal. This is where it closed today. It closed at like 189. I mean, this has just been a very dramatic sell-off, and it's just gone on for days and days and weeks and weeks. Take a look at the historical quote here. Look what the stock's done. Okay, this is the 1 year. Look at what this has done. I mean, it was over 300 at, the end of July, and it's gone from, I don't know, what is this, 310 down to 189. I mean, this is just a absolutely brutal, ridiculous sell-off. Take a look at the 3-year chart. I mean, it really gives you an appreciation of what's going on. You got to go back to the end of 2020, okay, to see these levels. And as I said, it traded above 300 not too long ago. So this is really a very dramatic sell-off. And this is what is somewhat mystifying to me. I mean, take a look at the earnings. Okay, this was the third quarter earnings. And you see over here, third quarter earnings came in at $1.11, right? Versus the consensus estimate of $1.07. So it beat consensus by 4 cents, okay? I mean, that's not a blockbuster quarter, but I mean, it did beat expectation. 2021, we're on track to do, we're on track to do $4.62 for the year, which is over 20% above what they did last year, 25%. So it's not like the company's falling apart, but you wouldn't know it from the stock chart. All right. Let's take a look at one other thing. I just wanted to look at the analyst report. Okay, so this is what the analysts are saying, right? They've got an average price target of 276. Right now it's selling for 189, right? You got a low down here below 200. You got 275 as the mid and almost 300 here as the high. Okay, you can see analysts have been souring on it. This is sort of a kind of an indication of how Wall Street's looking at it. Sentiment is definitely going negative, and I think it's fairly safe to say that the reason it's going negative is because of the perception of increasing competition and therefore a slowing growth rate. Okay, now I want to take a look at the technicals. Those of you who have watched this channel before know that I like to go into this technical analysis because it really speaks to the timing of a purchase, and I want to see how badly oversold this stock is right now. I mean, you can tell from the chart it's oversold, but this really gives you some kind of a firm footing in your analysis of how oversold it actually is. Okay, you can see here the Bollinger Bands. I'm going to change this to the 50-day moving average. That to me is more relevant than the 20-day. You can see what this represents is 2 standard deviations below. This is the Bollinger Band below the 50-day moving average. You can see that the stock is currently trading below 2 standard deviations below the 50-day moving average. That indicates extremely oversold. Okay, you go here to my other technical indicator. This is the slow stochastics, and you can see this is in massively oversold position right here below this line. You can see it jumped up above oversold for about a week, and then it came back down. These are my confirmatory indicators. This is the relative strength index. This is down in bearish oversold territory, and this momentum index is oversold, and this money flow index was money in and out. You can see it was hanging around oversold for quite some time. Some money has been perhaps going back into it, but it's still oversold. Okay, so the conclusion from looking at the technicals is this stock is extremely oversold. Okay, so what does all this mean to us? Okay, the way I look at it is this is a very established company in the e-commerce space, right? E-commerce is going to continue to grow, do nothing but grow. As we continue to come out of the pandemic, and as the economy continues to get back to normal, the economy will continue to grow, retail sales will continue to grow, and e-commerce should have a very, very bright future. Okay? Now, is there competition in the space? Of course there is. Okay, there's all kinds of things going on. You never look at a profitable niche such as online payments and not see a tremendous amount of competition. There's going to be new entrants coming in. There's going to be players like Amazon and Shopify that are going to be coming in and developing their own payment platforms and things of this nature, but it's all going to be occurring within the context of a growing market. Okay, and I think with 380 million users installed in the platform, which is growing at 20 to 25% a year, I think this company is going to continue to be successful. But what we're talking about now is we're talking about a stock that has been unbelievably oversold. Okay? Whatever the reason almost isn't important in the stock market. The fact is that stocks get oversold all the time, and it gives us an opportunity either for a swing trade, or if you're a long-term investor like myself, it gives me and you the opportunity to get into a stock like this, a company like this, that was started by Elon Musk. You probably know that, but just want to make sure you knew that. Started by Elon Musk. This was the genesis of his original wealth. This company, I think, will continue to have a bright future, and I think that this is an excellent time to get into it. I'm a little nervous saying this because it's really been shocking the way this stock has brutally sold off in the last month. It's really been quite shocking and quite alarming. However, I think you can get into this stock right now, and you are going to be positioning yourself either for a nice swing trade or for a nice long-term hold. As I've said in previous videos, if you're looking to establish this as a core holding, I would not buy it all at once. I would decide what level you wanted your exposure to be, and I would gradually scale into it as the stock started to show strength. Okay, I would not bet the farm on this low price now because it might go lower. Okay, so I would nibble around maybe by 25% of what you're thinking about buying for the long term, and as the stock shows some strength, as it shows the right price movement, I would continue to buy more and average up into strength on this stock. Well, I hope you found this interesting. If you've got some value out of this, please like, and I hope you subscribe. And the purpose of this channel is to make you a better, richer, and smarter investor. Okay? And we come out with not only stock tips and different stock recommendations, but we talk about the market in general. We talk about economics. We talk about different factors that are affecting interest rates and the markets. And it all comes together to benefit you as an investor in your thinking and how you're looking at the market going forward. All right, well, thanks for watching. And at this point, it's Greg out.